So hello friends, welcome to my channel in coaching center. So today I'm going to explain you that is the 11th standard business study. Second, that is the 12th chapter international business. Second part 2. So and this is the part 2 video, the international business second part 2 video. So your firm is planning to import textile machinery from Canada. So how, let us know. Import textile machinery from Canada, how it happens. So the importing firm will have to gather information about the price of the machinery, terms and conditions on which the selected Canadian exporter is willing, and the importer needs to consult the export import policy EXMI policy to know whether the goods that he or she wants to import are subjected to import licensing, and the firm needs to obtain IEC number. For this, the firm needs to contact Directorate General Foreign Trade or the relevant regional import-export authority. And next, the firm must then convert domestic currency into foreign currency to make payment of the exporter, and this is done by submitting an application to a bank authority by RBI to issue foreign exchange in the prescribed for along the documents. And after obtaining the import license, the importer places an import order, and then the importer also need to obtain a letter of the credit from its bank, and the importer should make a arrangement in advance to pay to the exporter. And also after loading the goods at the port, the exporter sends the shipment address to the importer, and also the importer must overseas supplier as per the contract, and the importer needs to pay certain amount of the custom duty. So let us know about the principal document used in exporting is document related to goods. Export invoice, that is it's a seller bill for merchandise, and packaging list, so it is a statement of the number of cases or packs and the details. And certificate of origin, so this is the certificate which specifies the country in which the goods being exported were produced. And certification of inspection, so it is the proof that the goods being exported are of good quality. Next, document related to shipment, so made receipt, so the receipt is given by the commanding officer of the ship to the exporter after the cargo is loaded on the ship. And shipping bill, so it is the main document on the basis of which the customs office grants permission for the export. And bill of lading, so it is the document wherein a shipping company gives its official receipts of the goods put on board. And airway bill, so it is issued by the airline. And marine insurance policy, so it is the certificate of insurance contract under which the insurance company concerned in return for a premium or agrees to pay an exporter a specific amount. Next, cart ticket, so a cart ticket is known as the cart chit, vehicle or gate pass it is called as. And document that related to payments or letter of credit, so it is a guarantee issued by the importer's bank that it will honor up to a certain amount the payment of export bill to the bank of the exporter. And bill of exchange, so it is the written instrument whereby the person issuing the instrument direct the other party that is necessary document relating to the particular export. Next, so let us list and explain various incentive and schemes that the government have evolved for promoting the country's export. So duty drawback scheme, since the goods are not produced for domestic consumption, they are entitled to get exemption from various excise and custom duties. And export manufacturing under bond scheme, so this facilitates entitles a firm to produce goods without payment or excise and other duties. And exemption for payment of sale tax, so goods meant for export purposes are not subjected to sale taxes. And advance license scheme, so it is a scheme under which an exporter is allowed duty free supply of domestic as well as imported inputs required for the manufacture of export goods. Next, export promotional capital goods scheme, so this scheme allows exporter firms to import capital goods at negligible. And scheme of recognition from as per house trading house and other super trading house. The scheme encourages firms to export in ever large quantity and export of services. So in order to boost the export of services, various category of services houses been recognized. And export finance. So finance is made available to concessible rate of interest to the exporter and export processing zone. So these are the industrial estate which forms enclaves for the domestic traffic areas and 100% export orientation unit. So the 100% export orientation unit scheme was introduced in 1981, adopting the same production regime as EPZ, wider option in location. So let us identify the various organizations that have been set up in the country by the Council. So these are non-profit organizations, so registered under the Companies Act or the Societies Registration Act, and commodity boards. So these are the boards which have been specifically established by the Government of India for the development of production of trade commodities and their exports. And Export Inspection Council of India, so it was set up by the Government of India under Section 3 of the Export Quality Control and Inspection Act of 1963. And Indian Trade Promotion Organization, so it was set up on 1st January 1992 under the Companies Act 1956 by the Minister of Commerce and Government of India. And Indian Industry of Foreign Trade, it was an institution that was set up in 1963 by the Government of India as an autonomous body registered under the Society Registration Act with the prime objectives of profession of the country foreign trade management for the management of foreign trade. And Indian Institute of Packaging, so it was set up by the set up as a national institute jointly by an Ministry of Commerce, Government of India, and the Indian packaging industry, and yield interest in 1966. And it is a training cum research institution for them. And state trading organization, so the state trading organization was set up in 1956. Its main objective is to stimulate trade, primarily export with the various trading partners in the world. So what is World Bank, and let us discuss about the various objectives and role of it. So World Bank, so the International Bank for Reconstruction and Development, is IBRD, is also known as the World Bank. And to facilitate the task of reconstruction of the war, and to focus on the development of undeveloped nations, and to encourage investment in infrastructure development, agriculture, and to eradicate poverty, these are their objectives. And the role of affiliated agencies or international less developed members countries on a soft loan basis. And International Finance Corporation, IFC, it is established in July 1956 in order to provide finance to the private sector of developing countries. And the Multinational Investment Guarantee Agency, MIGA, it was established in April 1988 with the objective of encouraging foreign direct investment in the less developed nations of the world. And it also aims at ensuring investors against political and non-commercial risk. And what is IMF, International Monetary Fund? So it is the second international organization next to World Bank, and the headquarters of this is located in Washington DC, and it was came into existence in 1945. And the various objectives of IMF are to promote international monetary cooperation throughout a permanent institution, and to facilitate expansion of balanced growth of international trade, and to contribute thereby to promotion and maintenance of high level of employment, and to promote exchange stability with a view to maintain orderly exchange arrangement among the member country, and to assist in the establishment of multilateral system of payment in respect to current transaction between member. And functions of IMF are providing short-term credit to member countries, providing machinery for the orderly adjustment of exchange rates, acting as a reservoir of the currency of all the member countries, and acting as a lending institution for foreign currency, determining the value of country currency, and providing machinery for international consultation. So let us know about the details about features, structure, objectives, and functions of World Trade Organization. So the GATT was transformed into World Trade Organization in 1st January 1995, and the headquarters of this is located in Geneva, Switzerland. And treaty with the approval of the government and legislature of the member state, and the decision of the WTO are made by the governments of the member nation. So structure of WTO is, so WTO comprises of the ministerial conference, and which is composed of international trade ministers from all member countries and is responsible for setting the strategic direction of organization. And the general council is composed of senior representatives of all members responsible for overseeing the day-to-day business. And the trade policy review body is also composed of all the WTO members, and the dispute settlement body is also composed for all WTO members and oversees the implementation and effectiveness of the dispute resolution process of all WTO agreements. And the secretaries and directors general secretariat and director general undertake the administrative functions of running all aspects of organization. And the committee on trade and development and committee on trade and environment have specific mandates to focus on this relationship. So objectives of WTO are to ensure reduction of tariff and other trade barriers imposed by different countries, and to engage in such activities which improve the standard of living and create employment and increase income, and to facilitate the optimal use of the world resource for suitable development, and to promote integrated, more viable and durable trading system. And functions of WTO are promoting an environment that is encouraged to its member countries to come forward to WTO, and laying down a commonly accepted code of conduct, and acting as a dispute settle body, ensuring that all the rules and regulations prescribed in the act are duly followed by the member countries. IBRD, and also supervising on regular basis the operations of the revised agreement and ministerial declaration relating to goods and services and trade related intellectual property rights. So okay friends, this was your chapter International Business 2, and that was a part 2 video of explanation. So like the video, comment on my, subscribe my channel and consider for more video. I'll see you in my next video explaining another chapter. Till then, take care and stay by my friends.